Now, before we adjust our settings, please remember that trading involves risk. This strategy is for educational purposes only, so never trade money you can't afford to lose. First, let's fix the chart. We are trading 15-second candles with a 1-minute expiration time. We want fast entries and fast exits. For our indicators, we need two specific tools. First, open up the Keltner channel. Set the period to 20 and the multiplier to 1.0. We want a tighter channel here because we are looking for explosive breaks. Second, add the rate of change, or ROC. Set the period to 5. Think of this as our speedometer. Here is the logic behind the setup. Price moves in bursts. The Keltner channel shows us the normal path, while the ROC shows us the speed. When the price breaks the channel with speed, that is a flash momentum burst, and that is where we strike. So, here's the exact rule for a buy option. First, look at the ROC. It must be above the zero line and angling up. Second, the price candle must close outside the upper Keltner channel. If you see that speed plus a breakout, you take the trade immediately for 1 minute. For a sell option, we just flip it. The ROC must be below zero and angling down, and the price candle must close outside the lower Keltner channel. It sounds simple, right? But wait, I told you earlier that avoiding bad trades is the secret to profit. Here is where most traders fail with this strategy. Rule number 1 is the SNR trap. Never take a trade, even if the indicators align, if the breakout candle is slamming directly into a strong support or resistance level. The wall is always stronger than the speed. Rule number 2 is the exhaustion candle. If the breakout candle is abnormally huge, too big compared to the previous candles, do not enter. That is usually an exhaustion move, and the price will likely snap back against you. We want steady momentum, not a desperate jump. Let's watch some raw live trades so you can see how I filter these signals in real time. Now let's stop talking theory and watch this strategy in action. I've spotted a setup here that is absolutely textbook. I want you to look exactly where my mouse is. Do you see that red candle? It hasn't just touched the lower Keltner channel. It is forcefully closed outside of it. That is our breakout signal. But remember, a breakout without speed is often a trap. So I immediately check my speedometer down below. The ROC line is clearly below zero, and crucially, it is angling sharply downwards. This tells me the sellers aren't just present. They are aggressive. Everything aligns, so I take the sell trade immediately. Now watch what happens next. This is the flash effect I told you about earlier. Because we filtered for velocity using the ROC, we aren't getting stuck in a choppy sideways market. Look at that drop. The price is literally melting away from our entry point. This is the difference between guessing a reversal and trading with the momentum. The Keltner channel showed us the volatility was expanding, and the ROC confirmed the push. When you have this kind of confirmation, you don't need to stress during the trade. You can just sit back and let the market do the work. And there is the result. We finished deep in the money with a clean, solid profit. Now, I want to show you the flip side. I recorded this specific trade to show you exactly how the market traps beginners. On the surface, this looks like another sell signal. The price broke the lower channel and the momentum seems strong. But look closer. Do you see that invisible floor? We are smashing right into a previous support level. Also, look at the size of that breakout candle. It is massive compared to the others. This isn't a healthy breakout. This is a panic move. Despite the warning signs, let's say we ignore the rules and take the sell trade anyway. As soon as the trade starts, notice the difference compared to our winning example. Instead of melting down further, the price immediately halts and snaps back up. Why is this happening? Because that huge red candle was an exhaustion candle. The sellers used up all their energy trying to break that support wall, and now there is no one left to sell. The buyers are stepping in to scoop up the cheap price, and we are stuck in a reversal. The velocity was there, but it hit a brick wall. And there is the result. A loss. A classic fakeout. The market lured us in with a big fast move, only to reverse instantly. This is exactly why I gave you rule number 1 earlier. Speed is powerful, but speed hitting a solid support level will always result in a crash. If you see a setup like this, where the candle is too big and the floor is too close, just sit on your hands and wait for the next opportunity. It is better to miss a trade than to lose your capital on a fake breakout. Now, I want to show you the flip side. I recorded this specific trade to show you exactly how the market traps beginners. On the surface, this looks like another sell signal. The price broke the lower channel and the momentum seems strong. But look closer. Do you see that invisible floor? We are smashing right into a previous support level. Also, look at the size of that breakout candle. It is massive compared to the others. This isn't a healthy breakout. This is a panic move. Despite the warning signs, let's say we ignore the rules and take the sell trade anyway. Now let's look at a buy setup that traps 90% of new traders. I took this trade specifically to demonstrate the danger of what we call an exhaustion candle. If you look at the chart, the signal seems valid at first glance. The price broke the upper Keltner channel and the velocity is up. But look at the sheer size of that green breakout candle. It is massive. 3 or 4 times larger than any of the previous candles. It looks like strength, but in reality, it is the market sprinting too fast. When a candle is this too much big, it means the buyers used all their energy in one go. Watch what happens immediately after we enter. Instead of continuing up, gravity kicks in. Because the price moved so far, so fast, in just 15 seconds, there are no buyers left to push it higher. This is simple physics. The market is overextended and needs to breathe. We are sitting in a buy trade hoping for momentum, but the market is actually entering a natural correction phase to fix that sudden imbalance. The flash happened before we entered, not after. And there is the result, a loss. The price snapped right back down, erasing that sudden spike. This is the hard lesson I want you to take away. Momentum is good, but a desperate giant leap usually means the move is over before you even enter. If you see a breakout candle that looks like a skyscraper compared to the small houses around it, do not touch it. It is always better to miss a winning trade than to get crushed by an exhaustion candle. Now, I am showing you another loss, and I am doing this on purpose. I read your comments. I see some of you saying, Sam, the strategy didn't work for me, or I tried this and lost. Here is exactly why that happens. Look at this buy setup. I entered here to prove a point. Yes, the ROC is up. Yes, we broke the channel. But look at where we stopped. We slammed directly into a resistance level with a candle that is way too big. I ignored the context, and I just blindly followed the arrows. This is what 90% of losing traders do. Watch the trade progress. The market isn't stupid. It knows that big green candle was a desperate sprint, not a steady climb. Because we hit that resistance ceiling, the price immediately stalls. There is no fuel left in the tank. The buyers are exhausted, and the sellers are sitting at that resistance level just waiting to push the price back down. We are fighting an uphill battle because we ignored the rules. And it's a loss. Another zero payout. Now you might be thinking, Sam, you just showed us multiple losses. Is this strategy actually garbage? Absolutely not. I took a total of 9 trades in this session. I showed you these losses first so you understand what not to do, but you need to see the full picture. Do not click off because in just a moment, I am going to reveal the full summary of all 9 trades. When you see the final profit count, you will realize that if you just cut out these bad entry mistakes, this strategy is a machine. Let's get to the final results. All right, we have covered the traps and the mistakes. Now let's get back to business with trade number 8 of the session. I want you to compare this setup with the losing trades I just showed you. Here, we have a sell signal on chart. Notice the difference? The breakout candle is strong, but it isn't freakishly big like the exhaustion candle we saw earlier. Also, look to the left. There is no immediate support level blocking the path. The road is open, the ROC is angling down, and the market structure is healthy. This is what a high probability setup actually looks like, so I enter the sell trade immediately. As the trade plays out, you can instantly see the difference between a forced trade and a flow trade. Because we aren't fighting a support level, the price doesn't hesitate. It just drops. This is that flash momentum we are hunting for. When you filter out the bad signals, you stop sweating over every tick and you start trusting the velocity. The market is paying us because we were patient enough to wait for a clean lane. And just like that, we are back in the profit column with a comfortable win. The price finished well below our entry point. You need to see the final numbers to understand if this strategy is truly profitable after all the ups and downs. Let's get to the final trade. All right, this is it. Trade number 9. The final trade of the session. I've taken this buy setup because the channel break is clean and the velocity is steadily rising. No giant candles, no nearby resistance. And there it is. A clean win to close out the session. The momentum carried us right through. So that's it. 9 trades done. Now, for the moment of truth. I told you I wouldn't hide anything to answer my critics. Here is the full transparent summary of today's live session. Out of 9 total trades today, we secured 6 solid wins and took those 3 losses I showed you. Think about that. Even including those 3 trades where we deliberately ignored the rules and got trapped, we still walked away profitable. This proves that the rate of change flash strategy is a powerful weapon, but only if you have the discipline to follow the rules and avoid the traps. If you cut out those 3 bad entries, you are looking at a near-perfect session. If you appreciate this raw, transparent style of showing both wins and losses, smash the like button right now.